Chip stocks just went absolutely nuclear today. KLA up nearly 12%, and it's not stopping there. The semiconductor sector is on fire right now, and if you're not paying attention to what's driving this, you're missing some serious money moves. Let's find out what it means for you. Let's start with the indices. So the Nasdaq had a really solid day today, up 2.07%, closing at 25,820. That's a strong move, especially on Monday. But here's the thing. The weekly picture is a little mixed. We're actually down 1.32% on the week, so this bounce today matters. The big driver? Semiconductor stocks. When chips are rallying like this, it pulls the whole Nasdaq up with it because tech is such a huge piece of that index. We're seeing some rotation back into growth and innovation stories, which is exactly the kind of energy the Nasdaq loves. The Dow had a quieter day by comparison, up 0.59%, sitting at 52,182. Now here's what's interesting. The Dow is actually holding up better on the week, up 0.91%. So while the Nasdaq bounced hard today, the Dow's been more consistent. That tells you something. The Dow is more value and industrial heavy, while the Nasdaq is all growth and tech. So we're seeing a little divergence here. Nasdaq catching up after a rough week, Dow staying steady. Neither one is screaming risk off right now, which is good to see. Now here are the top movers of the day. KLA is the headline mover today. That's KineMaster, actually KLA Corporation, the semiconductor equipment maker, up 11.97% in a single day, trading at 278.39. Now this stock is up just 3.43% on the week, so most of this move happened today. This is likely tied to SpaceX news that just broke. SpaceX is joining the Nasdaq 100 in a fast-track process, and that's going to drive huge ETF buying demand across the tech and chip sectors. When index inclusion happens, especially fast-tracked, passive funds have to buy these names. That lifts the whole group, and KLA, as a critical supplier to chip makers, is one of the big beneficiaries. Tesla is riding the same wave, up 8.46% today to 411.84. Week-to-date up 1.68%. Tesla is not a traditional chip stock, but it's tied to the semiconductor story because chips are essential to electric vehicles and autonomous systems. Plus, Tesla benefits from the same tech rotation that's pushing Nasdaq higher. The company hasn't had any big news today that I can see, so this is more about sentiment shifting back toward growth and innovation after a rough week. That's Tesla's home turf. LM Research is the other big semiconductor equipment name up today, up 8.39% to 410.91. Week-to-date basically flat, up just 0.33%. So like KLA, almost all of this move happened today. Same story, semiconductor equipment makers are essential infrastructure for chip makers, and when there's rotation back into chips, these names go with it. Both KLA and LAM are the picks and shovels plays of the semiconductor boom. If chips are rallying, these two are going to rally hard. Google is up 4.82% today to 353.65. Week-to-date up 1.14%. This is a more muted move than the chip stocks, but still solid. Google's a mega-cap tech name, so it participates in the tech rotation but doesn't have the same leverage that equipment makers do. Google also benefits from the fact that Alphabet owns so many different business lines. Ads are still strong, cloud is growing, and AI is a huge story for them. The stock's been steady on the week. So today's move is more about the broader tech recovery than any specific Google news. Target is the outlier today, and not in a good way. Down 4.61% to 133.92. But here's the interesting part. The stock is up 3.23% on the week. So there's a disconnect. Today's sell-off could be profit-taking after that weekly gain, or it could be related to the retail sector news that just broke. A major fashion retailer just closed 136 stores and killed one of its brands. That's sending a signal that retail is under pressure, that consumer spending might be softening. Target is exposed to that same risk, so investors are taking some chips off the table. A warning sign for the broader retail sector worth watching. Now, let us look at energy and fuel. Oil had a decent day today. West Texas Intermediate crude up 1.72%, trading at 70.42 a barrel. But if you look at the week, down 5.88%. That's a pretty sharp pullback over 5 days. Prices have come down a lot, and today was just a small bounce in a bigger downtrend. Likely story here is global demand softening a bit, and China's economy. Even though it's picking up in June according to the headlines, traders are still cautious about how much oil the world actually needs right now. Natural gas moved in the opposite direction today, down 1.86% at 3.170. Week to date, we're down 2.46%. So gas is also struggling. Summer demand should be picking up for cooling, but the weakness tells you either storage is building faster than expected or demand just isn't there yet. Could be mild weather in key regions, could be industrial slowdown. Either way, it's not a bullish picture for energy commodities right now. Moving on to metals. Gold pulled back today, down 1.18% to $4,030.50 an ounce. And the weekly picture is worse, down 3.62% on the week. This is interesting because gold usually rallies when people are nervous about the economy or inflation. The fact that it's sliding tells you two things. One, the Fed is still leaning hawkish. Minneapolis Fed President Kashkari just said he expects a rate hike this year, which is going to keep interest rates elevated. And two, the dollar might be getting stronger, which makes gold more expensive for foreign buyers. When gold is falling, it usually means investors are feeling a little less scared right now. Silver is getting hit harder than gold, which is unusual, down 0.78% today, but, and this is a big one, down 10.33% on the week. That's a real bloodbath. Silver typically follows gold, but not always with this much intensity. The difference is that silver has more industrial demand mixed in with its safe haven appeal. So when silver drops this hard, it could mean two things are happening at once. Yes, people are less scared, so safe haven demand is down. But also industrial demand might be weakening because of economic concerns. That's a warning sign worth paying attention. And finally, let us look at tomorrow. All right, so here's what you need to focus on heading into tomorrow. We've got some important economic data coming out in the morning. Chicago PMI is expected to cool slightly, and we've got consumer confidence and job openings numbers. Consumer confidence is supposed to improve, which would be positive, but job openings are forecast to decline. That's a sign the labor market might be loosening, which could actually be music to the Fed's ears if they're worried about inflation. We've also got the S&P Case-Shiller housing data. Keep an eye on those numbers because they're going to set the tone for how the market thinks about inflation and interest rates going forward. The semiconductor rally is real right now. Don't dismiss it, but keep watching the silver and crude oil weakness. If those commodity declines are telling you something about global growth, that could push back against the chip rally down the line. Stay sharp, stay flexible, and remember, this market is always offering you opportunities if you know where to look. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.